Good morning and welcome to the ADS Securities Markets Update. As noted in our previous report yesterday, the US dollar continued to decline across the board on more and more economic releases from the US, which came in far away from the market estimates, leading the speculations for a rate hike by the Federal Reserve in June to below 40% only. And beginning with the US dollar index chart, yesterday the index failed to hold above its support area that mentioned yesterday at 96.50s, as noted in our previous report, declining to as low as 96.17. And yesterday's close is seeing a very negative sign, especially after closing the day well below that support, and which may lead also for further declines ahead. And the catalyst for such a move or further declines could be another disappointing data from the US, especially today, that we wait for the GDP numbers, in addition to a dovish or a potential dovish FOMC statement later tonight. In the meantime, the next support area for the dollar index stands at 95.22. The euro also kept on rising yesterday, or reaching as high as 1.0991, a few pips away from the key resistance area, which is at 110 or 1.10, which should be watched very closely today ahead of the US GDP numbers and the FOMC statement tonight. Finally, also the sterling dollar continue to rise again, or to advance to our next resistance level mentioned in our previous report as well, at 153.45 during the Asian that was yesterday's chart, but during the Asian session continued to rise toward 53.45, and which basically represents its 61.8 retracement level from 27th of November 2014 highs toward the 13th of April of this year, and this level also should be watched very closely today. As for the US figures yesterday, the consumer confidence index also unexpectedly declined toward the lowest level since December of last year, declining toward 95.2, down from 101.4, despite the fact that the estimates back then were to rise toward 102.2%. Richmond Fed Manufacturing Index also posted the second monthly decline in a row, came in first of all in a disappointment, posting a second monthly decline in a row, negative reading in a row, toward at -3 in April compared to -8 for the month of March, while it had been anticipated also to come in at -2. These are the data that accelerated the dollar selling yesterday. During the Asian session today, there were only two economic releases from New Zealand, which had only a slight impact on the markets, but the trade balance surplus increased again. One second. Yeah, the trade balance deficit, or the trade balance surplus in New Zealand increased more than expected, rising towards 631 million in March, up from 83 million in February, while the estimates were to rise only toward 300 million. And this is the third monthly surplus in a row, which is basically not seen since the beginning of 2014, and the highest level, or the highest surplus, since March of last year. The exports also increased to the highest level since March of last year toward 4.93 billion, and the imports also added around 4.3 billion, which is also the highest since December of last year. The Kiwi slides back at the beginning of the Asian session, after rising to as high as 77.40s yesterday, which was one of the best performer currencies yesterday after the Aussie. However, the Kiwi closed the day well above 77.05 resistance area, which opens the way for further gains ahead. However, the FOMC statement might change everything today. Therefore, we believe that a stand aside right now could be much better than to go into any trade for the time being. The Aussie also was the best performing currency yesterday, and the Aussie dollar also broke above the key resistance area, which was stand at 0.79, reaching as high as 80.28, and closed the day well above 0.80, which also seen as a critical breakout. However, we still believe again that it is better to wait for the FOMC and the US GDP today to decide on our next trade. As for the upcoming European session, there are a few economic releases today, including the UK nationwide house price index, the German CPI, the Eurozone money supply, the Eurozone also a private loan, in addition to the UK CBI realized sales. However, these figures are unlikely to have any major impact on the market, as all eyes will be on the US figures. As for the US session, we wait for the major GDP announcement, and in addition to the pending home sales, crude oil inventories, and finally the FOMC statement later tonight. But first of all, the US advanced GDP is expected to rise by 1% in Q1 of this year, after growing by 2.2% in Q4 of last year. However, we believe that there is a possibility for a negative reading or a negative outcome, given the fact that most of the economic releases since the beginning of the year came in with a disappointment, while some sectors are suffering since more than 6 months now, especially just like the factory orders and even the durable goods. The Bloomberg estimates right now also seen at the lowest level on the record at 1.25, down from the 3% that was estimated since the beginning of the year. But moreover, we have the pending home sales, which may rise by 1.1% in March after rising by 3.1% in February. Despite these numbers, the effect might be limited or for limited time only, as all eyes will switch toward the Federal Reserve statement, and which will be released at around 10 p.m. Abu Dhabi time, which is around like 6 GMT time. But we believe that the Federal Reserve will backtrack a bit, especially if the GDP numbers showed a notable slowing down. However, it will keep on playing with the statement wording to keep the idea for rate hike this year. If the Fed showed a dovish tone today, we believe that the US dollar will continue or will remain under pressure throughout the week. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. And we will be also on a live coverage of the FOMC statement later tonight. Thank you for watching. I'll see you once again tomorrow.